In this, we will start with the budget, how to prepare and budgeting. Right. First question, given the following details, like particulars are given, fixed cost A, fixed cost B, variable cost C, variable cost D. And for 5,000 units, which is actually 50% capacity, these are the cost incurred. Next year, the company will produce 6,000 units and anticipates fixed cost A will increase by 7%, fixed cost B will decrease by 5%, variable cost C will decrease by 8%, and variable cost D will increase by 10%. We are supposed to calculate the total cost for 6,000 units. Let us start. So these are the costs. Question says that they are going to produce 6,000 units in the coming year. Fixed cost A, remember, we will always consider fixed cost as the total value, variable cost as unit value. Means in case fixed cost is given as per unit, we need to convert it into total cost. I mean, we have to multiply it with the number of units and convert it into a total fixed cost. Whereas in case of variable cost, if it is given in terms of total cost, we have to convert it into per unit cost. That is how we will proceed. Right. Now, fixed cost A, if it is 6,000 units, how do we work out? Here it is 15,000 given, so no change. Only thing is they say fixed cost will increase by 7%, which means this 15,000 will add 7%, which means we are going to multiply it by 1.07. That if we do, we get 16,050. Fixed cost B, here it is given per unit. First, we will convert that into into total. Instead of unit, we have to convert it into total. Means here it is 5,000 units, 4 rupees per unit. So first of all, 5,000 into 4, which is 20,000. And then they say fixed cost B will decrease by 5%, which means this value we are going to, since it is getting decreased by 5%, we are going to multiply it by 0.95. If we do that, we will get 19,000. Variable cost, here it is given in terms of per unit only. That is what we want. But they say variable cost C will decrease by 8%, which means this 3, we are going to multiply it by 8%. It is getting decreased, means we are going to consider only 92% of this, means 0.92 will multiply. This is working out to how much? 3 rupees. Let us calculate that. 3 into 0.92. 9.95, and this one will be 19,000. 3 into 0.92, we get 2.76. That we will multiply it with 6,000 units. Into 6,000, we get 16,560. Right? We create one more below. Here for the total. Okay, variable cost D. It will increase by 10%. Variable cost here it is given in terms of total, so that I need to divide it by the number of units. 25,000 divided by 5,000 gives you 5 rupees. 5, and then there is an increase expected by 10%. So I will multiply it by 1.1. So we get 5.5. And that we will multiply it with 6,000 units. So we get what? 5.5 into 6,000. We get 33,000. So we can calculate the total cost for 6,000 units as $84,610. That is the solution for this. Let us move on to the next question. Given the following details, particulars they had given as material cost, power, repairs and maintenance, depreciation, administration overheads. And this is for 5,000 units. They gave us material cost 35,000 rupees, power rupees 2,000, repairs and maintenance 3,000, depreciation rupees 10,000, admin overheads rupees 5,400. They also gave us the nature. Material cost is 100% varying, power is 80% varying, repairs and maintenance is 3,000, which is 75% varying, depreciation is 100% fixed, admin overheads is 20% varying. We are supposed to calculate the total cost if we manufacture 4,000 units and 6,000 units, these two working, right? So now material cost. Material cost is 100% varying, which means it is 35,000 divided by 5,000, which is 7 per unit. We have to consider 7 per unit into 4,000, we get 28,000. Here 7 into 6,000, we get 42,000. So material cost is done. Here they say power is 80% varying, which means we can say 80% varying means 2,000 into 0.8, that is your varying 1,600. That means this is variable cost. That means per unit will be 1,600 divided by 5,000. We get 0.32 per unit. So here we will have 0.32 into 4,000. We get 1,280. And then here 0.32 into 6,000. We get 1,920. Now fixed cost will be the balance. So 2,000 minus 1,600, you get 400. So that 400 will be there for both as it is because it is fixed expenses. So we will write 400 there. Repairs and maintenance, they say 75% varying. So variable cost will be 3,000 into 0.75. So 3,000 into 0.75, we get 2,250. 2,250. Which means per unit it will be divided by 5,000. Per unit it will be 0.45. This is per unit, which means 0.45 into 4,000 for the first one, 1,800. Here 0.45 into 6,000. We get 2,700. 2,700, sorry. So here fixed cost will be 3,000 minus 2,250. So you get 750. So both places we will write 750 here, 750 here. Depreciation, they say 100% fixed. So straight away we can say rupees 10,000 here also, rupees 10,000 here also. Then admin overheads, they say 20% varying. So variable cost is 5,400 into 0.2. We get 5,400 into 0.2. We get 1,080, which means per unit it will be 0.216. So 0.216 into 4,000, We get here 864.216 into 6,000. There we will get 1296. Then here fixed cost will be 5,400 minus 1,080. We get 4,320. That we will write full amount. 43. No need to convert it into unit. Now we can add 4320 plus 864 plus 10,000 plus 750 plus 1,800 plus 400 plus 1,280 plus 28,000. We get 47,414. This one 42,000 plus 1,920 plus 400 plus 2,700 plus 750 plus 10,000 plus 1,296 plus 4,320. Get 63,386. That is the solution for this question.